All right. We are live. Hello, everyone. Hello, hello, hello. All right. We got a lot to talk about. A lot to talk about. Listen, I changed up my mic setup. Can you guys hear me well or what? Let me know. Let me know. I'm trying to get all the bugs. I can hear myself. There's an echo. Okay, there's that. That's gone. Okay. All right, cool. You guys can all hear me. Hey, G Money, Geo. Hey, fun fact: that guy G Money, I knew him since fifth grade, elementary school. He can he can attest that I was a very weird child. Not many friends, including him. He wasn't really my friend, but we were cool. Cool dude. We're friends now, though. There's still an echo. I'm just trying to figure out how to get rid of this fucking echo, and then I'll start the good stuff. Okay, I'm just going to take off my headset because that way. Can you guys hear an echo, or do you just hear me? I hear an echo when I have my headset on. It's clear. All right. All right, cool, everyone. Hey, how you doing? I'm going to look into the camera. Let me move this over here a little bit. All right. Okay, everyone. How you doing? How you doing? How you doing? Okay, so if you're here, you want to know what's going on in the market ahead. Before I get into all that, I am going to commit to hey Hab, this is the beginning. You didn't miss anything. I'm going to commit to a Sunday live regularly every Sunday and give my prediction on the week to come. Let me lower my headset. So this week, what's going on? All right. So I will give you guys the bluff, the bottom line up front. I see a lot more pain in the coming week. I don't see a bull trap rally coming until let me see real quick. When was it? Until around 3350 on the XPX. So about maybe 3400 to be conservative. 3400 on the SPX. All right. So that's what I think is coming. So now I wanted to show something that was very, very interesting to me. So we're going to go ahead and do that now. Let me put my headset back on because I'm going to share my screen. Okay. All right. Let me know or make sure that you guys can hear when I press play. Let me know if you guys can hear this. Can you guys hear that? Nope. Okay, that means I gotta. Okay. Can you hear? Okay, that means I gotta fix. That's too easy. Too easy. Display capture settings. Capture method. Automatic cancel. Desktop audio. Okay. Well, let me see this. So you guys. All right. If I put it on this screen. Okay, tell me if you guys hear it now. Do you guys hear it now? Nope. All right. I'm still a rookie at this. Hold on, but we're gonna get it. We're gonna make it happen. We're gonna make it happen. It's very important that you see this. Give me a second. It's a setting somewhere. It's a flippin' setting. And if not, I'll just explain it. Okay, but give me a second to figure this out. Sorry, everyone. I will get better. I will get better. I assure you. Um, I guess it's just the OBS. I can't really. Okay, I can't really share, and I'm not going to waste too much time. I'm going to figure this out. Next time, it'll be much more professional. So let me explain to you what I was trying to show you. So, Chamath Palapapatiya, he came up, and here, what I can do is I can let you guys watch the video yourself. I'm going to link it in the chat. All right, at your leisure, go ahead and watch this video. Okay, so Chamath Palapapatiya in this chat or in this says, "Hey Tim," he says that what happened on Thursday was basically people seeing that the market was close to a bottom, and investors are looking for any excuse to buy back in. That's a short version, okay? Hello, Michael. Hello, everyone, by the way. If you said hello and I haven't said hello back, then I apologize. So I want you guys to watch that video, and next week I'll be better. I'll be able to share screen and everything. I'm still new at this stuff, still in my infancy. So Chamath said that that Thursday was a buying opportunity, basically. And then he went on to go and say other stuff. But in a previous interview that Chamath had, he says that the bottom would be somewhere in 2023. So he contradicted himself. I think that these billionaires don't remember or keep track of what they said. So let me tell you what Thursday was, okay? Because I've said this before and I'm going to say it again. Thursday, before market open, the CPI data came out. The CPI data was very, very bad. It was worse. We had worse numbers than the last one. Okay. We didn't go down a little bit. We didn't go down at all. It went up a little bit. That's very, very bad because that's basically signaling to the Fed that they need to keep up the rate hikes in perpetuity. So, what happened on Thursday? Why did we get that big reversal bar? Right? We gapped down on the SPY, the S&P 500, and then we went up for the entire day. And then the next day we went down. Why did that happen? Well, I'll tell you why it happened, everyone. I'll tell you why it happened. We're in a bear market, and there was a lot of shorts going into CPI, a lot. If you guys saw what the smart money and the whales were doing, which my Patreon did get that message, they were buying an exorbitant amount of puts. So on Thursday, when we gapped down, there was a lot of short covering because the volatility was extremely high, right? And those puts were paying off a lot. So shorts were covering. And then when shorts covered, because covering is basically buying, when shorts covered, then more shorts covered because they said, "Oh crap, we're on the way up, right? Holy crap, we're on the way up. Let me cover." And then more shorts were covering because they saw that their gains were going down. And then at the same time, retail was like, "Look, it's a reversal. We're going back to the upside. Buy, buy, buy." FOMO, right? So then buying begets buying, and shorts were covering, and stupid ass retail was buying and pushing it up and up and up and up. And on Thursday, we had the fifth largest reversal in history of the S&P, the fifth. Okay. So Chamath Palapapatiya says, "Oh no, that was people realizing that the market is close to a bottom and it's consolidating." Listen, guys, it is not consolidating. Next week is also going to be very bad. I predict we can get as low as 3350 or 3400, right? That's more than 100 points from where we're at right now. And I want to make that very clear. Listen, we are in a bear market. And this bear market is here to stay. There is nothing going on in the macro, which we'll discuss in this live. There's nothing going on that will take us to the upside. Nothing. There is only bad going on. So before I get to my next segment, I'm going to go ahead and look at the chat and take some questions if you guys have some. And if you're new here, I'd really appreciate a subscribe as I'm trying to grow. If you want to find it in your heart to give me a like, it's free. I'd appreciate that as well. Helps the algorithm, okay, guys? Rich said it's interesting to hear me. Thanks, bro. Oh, by the way, let me make Rich a moderator. Rich is add moderator. There you go, Rich. You're now a moderator. My first moderator is Rich. Good guy. Sorry, I missed the beginning. No. Thanks for that, G. I appreciate that. This is a pretty good. I hope this is not a podcast. It's just a live session. All right. So, does anyone have any questions before I start going into some other things? Go ahead and feel free to ask me something. Anything. Okay. So go ahead and put your questions in. I'm going to go to my next thing. So today, there was a channel that I follow because I really like the gentleman. The channel name is Freelance Finance. I saw him when he was on a Mitch stream, and I just really dig the way his brain works. Right, I appreciate his intellect. Today the other day he had a reaction video to Chicken Genius, right? And Chicken Genius used to be known as a big Tesla bull, and everyone likes bulls, right? Why am I bringing this up? Let me backtrack a little bit. Listen, I am bullish most of the time. I believe over time the stock market will go up. I am far from a perma bear. I am actually very rarely bearish, and I hardly ever buy puts or short. My strategy is a bullish strategy. If you understand options in a bull market, I make a lot of money because I write puts, which is bullish, using leverage and or margin. Right? I basically write puts on great companies at prices I don't think they're going to go to, and I collect the premium. But that'll be for another video. Well, I'll explain my strategy and why it works for me. The reason I brought that up, guys and girls, is because what I see a lot, right? It's human nature. It's almost like a cancel culture, right? People who aren't really traders, or if they're investing centric, but they may swing trade or something from time to time, and they are vehemently against shorting, they will look at people who are bearish as the enemy. They will like wish death upon them almost, right? They're like, oh, you went to the dark side, you're evil. Listen, you know what's evil? I'll tell you what's evil. Like making short reports or hit pieces on companies in order to forward your agenda. That's evil. And I don't believe in that. But normal people like you and I, seeing a trend in the market or in a stock and making a bet that it's probably going to go more down because of the micro or the macro does not make you evil. And you shouldn't be getting crap for it. And people who are bullish minded should not be giving bears crap for it. I really hope that the narrative changes for, if you're intelligent, it will. Because I am not a bear per se. I am, like Bruce Lee would say, I am like water. I am adaptable. I see something and I react to it. Just like during quantitative easing of 2020, the market went up parabolically. During quantitative tightening of 2022, the market is going to go down parabolically. I think this crash is going to be worse than the 2008 crash. I think it's going to linger a little longer. We had over 10 years of extremely good monetary policy. And then the second we get COVID, we get 40% of the world's US dollar created and injected into the economy. So with that kind of a parabolic rise, it's only natural that we go back down to the mean. And as a matter of fact, what's probably going to happen is an overreaction to the downside is going to happen. And for you bulls and investors out there, you don't have to dollar cost average in a crappy environment. You can stay cash. We're going to discuss some things that you bulls and you investors can do to protect yourself from this downturn. I will go into that, but I wanted to take a couple minutes and talk about what I noticed happening. And so, listen, hopefully, this stream opens your eyes to not looking at people who are rationally bearish as the enemy. You don't need to attack them or call them catastrophizers, et cetera, et cetera. Look at the macro. The macro says all. Okay, I'm going to go to the comments now. Can you please explain why Palantir inverses the market when the market keeps dropping heavily? Michael Ray, listen, I wrote you in a MITS Discord, and here's my answer to that. That's my opinion and my opinion alone, right? And if you want to know my thesis or opinion, you're gonna have to join my Patreon or wait till I make a video on it. Investor MD says, for those that haven't started SPY put position, should one try to start one soon or wait until the next rally? It depends, investor. If you're doing it for the basis of portfolio insurance, the sooner the better. If you're doing it for a trade, tomorrow, in my opinion, is also good. If you're waiting for a higher chance of profit, then the best thing to do is sell them into strength on the upside, and you dollar cost average into your puts, and that way you have a better chance of in a bear market, that is, of the downside coming. Can I make a video about a debit spread? One day I will. Right now, my Patreon is the one that's getting all that. But I think yesterday in the live, Alberto, if you look at yesterday's live stream, I did a Palantir bull debit spread example. Dave, not so much question, but could you give us a rundown on how to keep capital gains taxes in mind while trading? Dave, can you, Dave, you're a part of my Patreon, aren't you? I believe you are. If you are, Dave, write me a private message. Let me see what you say, but I think that's going to be for another video. We're keeping this live to talk about the week ahead and the S&P 500 as a whole. Do we have any indicators, market data, or results coming out next week? Not that I know of, Rich. I think there's some companies that have earnings, but I have to double check. Every American executive and engineer working in China's semiconductor manufacturing industry resigned yesterday, paralyzing Chinese manufacturing overnight due to Biden round of sanctions. Thoughts? That's a great question. That I did know about that. That is just another reason on why things are looking bad. Biden is basically causing more rift between us and China. So that can look as a negative towards the total market sentiment. I am buying puts on Monday, G Money. TM 900, really? What does that mean? TM 900, Rich? I don't know what that means. Question: why will Palantir inverse the market? I answered that already. Thoughts on Nvidia and AMD? Intuition. Now's not the time. Now's not the time to invest. I wouldn't short them, but now's not the time to invest. I would short Apple. I would short Microsoft. I'm not shorting Google, but I am going to short Apple. I am going to. Oh, can you guys hear me? Because this ran out of battery. Can you guys hear me? I'm going to plug it in. I'm not using that fucking thing. Okay. All right, perfect. Let me put this headsets. These are plug. Okay. Let me take these off because I hear myself. All right, as long as you guys can hear me. Okay, so is there a short Apple single ETF like an inverse Apple? I don't know. Wonder where Berkshire is going to buy on the dip. That's good. That's a good question. That's a good question. All right. So what I want to do for the 36 people that are in here is, if you're not in the Patreon, me and my Patreon, if you're interested in the Patreon, there's a $25 tier level. You get everything except for one-on-one from me, but I'm very active in it, and you can ask questions in the chat, and I'll answer you. There are currently no more $50 tier levels. I created a new tier today with only 5 slots, and that is 100. My time is getting very, very thin, so every time I open another level, the price is going up, and one day I won't have any more time, and so that's why there's not so many slots. But there's unlimited $25 slots, and I think $25 is a great value. We have multiple Zoom calls a week, a very active chat, and we're part of a grand community. It's a private community inside the Tom Nash community, which he himself has Zoom calls, and you being part of the $25 tier are also automatically get to be part of his $15 tier. So it's a great value. Okay, so what I'm going to talk about for a couple minutes is a lot of people who are in this finance realm, or watch me or watch other channels like mine, are not really traders. I want to make something very, very clear. I am a trader. I am a swing trader. I'm a professional swing trader. I trade professionally under an LLC account, and I have mark-to-market accounting. I do have a 401k where I invest, and I do have an IRA that I am no longer allowed to contribute to, that I invest, but I end up trading in those as well, because it's just, you can't take the trader out of me. $25 is expensive. If that's expensive, it's subjective, Cameron. If it's too expensive for you, I understand. But I think the members in my Patreon will disagree with you. I think I offer great value to them. Many of them have already made more money just either following my trades or adhering to my advice, either made money or saved money, than they'll spend in the entire year for my Patreon level. Okay, so what do I want to talk to you guys about? If you guys have great companies, great S&P 500 companies, so we're talking about, Tesla, Google, all the companies inside of the, yeah, it does have a money back guarantee. If you join and you don't like it after your first month, you can cancel and you'll get back 100% of your money. But then you can never join again, obviously. What was I saying? Oh yeah. So if you guys aren't traders, which most people aren't, okay, we will talk about Apple, Rich. I want to tell people how to protect themselves from this downturn, because there's a lot of people who are catastrophizing and really worried and have a lot of anxiety. Listen, I'm going to teach you two things. All right, how to ensure your portfolio in an easy way, or how to ensure your individual positions. So if you have great companies, what's WB need to N2 Ishan? Tell me what that is. Michael Ray, listen. If you do not believe in my technical analysis and my predictions, then you are free to go, my friend. You don't need to be here. People come here because they want to be here. If you doubt it, then sayonara. It's fine. It's okay. I'll live. I don't need everyone to agree with me. um Back to the task at hand. So let's say you have a portfolio, an investing portfolio of great companies, right? But you realize that we're in a bear market and you want to do what you can to mitigate the downside as much as possible, right? Because you've seen your account lose a lot of value and you don't want to sell because you're an investor, but you're not opposed to buying insurance, just like you're not opposed to buying car insurance, right? Um, I'm gonna explain to you very simply how to do it. And next time when I can share my screen, I would show. I don't know how I was able to do it yesterday and I can't do it today, but sorry. I'll figure this out. If let's say for ease of math that you have $100,000 portfolio and you have it in either the S&P 500 because that's all you invest in, or maybe you have it in S&P 500 companies like Apple, et cetera, et cetera. You can buy insurance on your portfolio at a fraction of the price of the portfolio. So the SPY, for example, let's say the SPY is trading at $360 a share. If the SPY is $360 a share, then one contract, which represents 100 shares, would be that you are basically that you are basically getting access or tracking or getting the move of $36,000 dollars if it's 360, $36,000 worth of stock, because 360 times 100 is 36,000. Now, when you buy a put, you're not paying the full share price, right? You're paying a percentage of that. It's called premium, right? And if you buy insurance that basically expires in 6 months, because we just did some the other day for the SPY, at least it'll cost about $3,000 per contract. All right, $3,000 per contract. One contract of $3,000, one put contract of $3,000 expiring in 6 months basically gives you insurance on $36,000. So basically, three contracts of $3,000, which costs $9,000, which is a little bit less than 10% of your total portfolio, will ensure your long position should the market keep on going down. Now, what do I mean by ensure? Your long positions go up when the stock goes up and they go down when the stock goes down. Now, if you're an investor, if it goes down, you're just going to keep dollar cost averaging in, but because you believe in it long term, but you are losing money. It's called unrealized loss, right? Because you haven't sold yet. However, you can buy insurance, portfolio insurance, by what I just talked about. And if it does go down, that put that you bought is actually worth more than what you paid for it. So if at the end of 6 months, let's say, just for an example, right? I'm not saying it's going to get there. If you bought a 360 put and you paid $25 for it, right, per share, which is 2,500. But I said 30, so let's say 30. You paid $30 for it, okay, per share, so that's $3,000. 360 minus 30 is 330. So in 6 months, the SPY needs to be at 330 for you to completely break even. You lose no money on the insurance. You don't make money, but you don't lose money either. Your longs lost a little bit of money, but your insurance was even. So you didn't lose any money on the insurance. But now let's say in 6 months, the SPY is at 300. If the SPY is at 300 and you bought a put at 360 strike and you paid 30 for it, that means 330 on the SPY is your break even. And that means 300 has given you a profit of $30 per share. That's basically $3,000 per contract. So you doubled your money. And if you had 3 of them, because you got the full portfolio insurance, you just made $9,000 on your insurance, right? And that's realized gain. So that gain will offset the loss that you took during this time. But the loss that you took on these great companies isn't realized. You're going to be fine. So you can use that gain and buy more of the companies that you love and want to own. So it's helping you dollar cost average in. Or you can say, okay, well, my portfolio went down 12,000, but at least my put paid me 9,000. So I hedged some of my risk, and this is what I'm talking about when I talk about portfolio insurance. And this is a great strategy for people who are long and investors, but they're also cognizant that we're in a macro environment. And instead of dollar cost averaging all of their money, they can use some of their money to insure against the downside. So I'm going to look at the charts now, or look at the chat now. I've been a member, Gabe. Oh, thank you, Hab. I appreciate that. Michael Ray, I want to believe in your analysis, but I wish you would give more of the rationale. That's all. I give lots of rationale. Gabe's advice will make you much more money than 3 Palantir shares. Thank you. Explain the KISS method, please, N2. It's really simple. Wait and time will tell. He's not predicting in a prophetic way. He's giving you educated guess. Exactly. It's my opinion based on historical trends, current macro environment. Exactly. Hit it right on the head, Nelson. These is I'm using logic. I'm using analysis. I'm using fundamental, technical, macro. I'm using everything to come to this conclusion. George, hey, Gabe, do you think that day trading can be enough to sustain oneself with it as a single source of income? George, if you're really good at it, absolutely. I used to day trade, but now I swing trade. Once you get a big account, there's easier ways, less stressful, to make decent money without the anxiety of day trading. What do you think about using a line of credit or margin to trade? I don't know what PCCM is, but Cameron, I don't recommend that unless you're an expert, you use margin, period. End of story. Seems to me with these contracts, you're just betting against another investor without any value generated on average. Well, Michael, your logic is has a lot of false. It's actually not correct. And but I'm not going to argue with you, man. This isn't an argument. This isn't a debate. I am experiencing this, and I know that you are not a trader. So for you trying to tell me what I know to be true is kind of laughable, actually. No, do not, Rich, do not delete things unless they are, unless they're trolling, right? If it's not a troll, don't delete it. I hate trolls, but unless it's a troll, don't delete it. I don't care. In the long run, I'm an optimist and a bull. Bet on innovation. Okay, Blake. And in the long run, you will be good. Kiss of Death sealed the deal. Yes, it did, G Money. I made a well, you know I did, because you follow all my videos. I made a video on the Kiss of Death, and that's also what sealed the deal for me. That was the day that I became full on bear, when we had the Kiss of Death. How will the ETS affect the global markets as the global insiders attempt to consolidate planetary resources? How will the ETS? What's ETS? I don't know what ETS. Wow, we have 41. I don't think I've ever had over 40. All right. Shout out to you guys. Hi, Andre. Hi there. Okay. So, all right. So there's no more. I've caught up with the chat. Let's go on to the next thing. So I explained you how to do portfolio insurance on like a whole portfolio using the SPY. Now you can use that same rationale on your micro. So Palantir isn't in the S&P 500, right? So you can buy, if you have a shit ton of Palantir and you're afraid that it's going to go a lot lower, which I don't think it will, but let's say you are. Let's say you have $10,000 worth of Palantir. Okay. Palantir is at $7.50, right? So that's $750 per contract. Or excuse me, that's $750 times 100. So 100 shares is 750. So 10,000. Let me get a calculator. I think it'd be like 12 or 13. Um, um, 10, 1, 2, 3, divided by 7.50 equals, yeah, 13. 13 contracts. All right. So what you need to do if you have Palantir, right? So because Palantir's share price is 750, you would basically buy 13 contracts because 750 times 1300 is it's a little bit more than $10,000. And you would buy 13 contracts at the money strike price, so 750, that expires in 6 months. And boom, you just bought yourself Palantir insurance. So if it goes way lower, you don't have to sell your Palantir shares, but your puts will give you insurance on your position. And you can do that with any stock at all. It's called portfolio insurance, and it's a strategy that I really wanted to share with people. Yes, you can also do that. You can also do that. On top of buying insurance, right? You can also write covered calls on your shares. That way you lower your cost basis even more. Options are literally the cheat code to the market, and I love them so very, very much. Emissions trading system. I don't know what that is, Chelsea. I'm sorry, Chelsea and Molly. What were you surprised at, Greg? Investory. What if you think Palantir will be at least in the 20s in 2025? What would be the best option play? Well, again, portfolio insurance is if you take into consideration the macro. It's not that you're stopped being bullish. It's just that you're mitigating your risk, right? Good trading and good investing has really good risk mitigation. In a bear market, if you still believe in a stock, I don't necessarily believe in buying calls in a bear market, but writing cash secured puts in a bear market against a stock that you want to own anyway, but at a cheaper price is always a good idea. So that's a great way to average into your shares during a bear market. He just can't comment going forward. Seemed a bit pointless having a negative person. Rich, did you like ban him? Because I don't agree with that. I thank you, but I wouldn't ban him. Like people who are like really disrespectful gets a ban, but people who just disagree with me, and I'll just ignore them if they get like silly, if they say stupid stuff and they just want to keep arguing. But as long as they're not trolling or disrespectful, please don't ban going forward. I don't know how to so just leave it be. What other stocks consider in the S&P for short-term swing? None. I am strictly bearish, Andre. I got 500 Palantir shares looking to buy 15 long call contracts soon. Cameron, I disagree. I think instead of buying contracts, I think you should write puts. You should get paid to own Palantir at a cheaper price. And if it doesn't go to that cheaper price, you get to keep the money forever. But if it does, you get Palantir at a better price. Covered calls. You collect premium for stocks you already own. Yes, Ajax. Rule number 1, don't lose money. Rule number 2, don't forget rule number 1. Absolutely. This has been a great stream so far. Time flies. We've already been here 40 minutes. I appreciate you guys. Is there anything I said that I was going to talk about that I forgot to talk about? I know I wanted to talk about the portfolio insurance. I did that. I talked about the Chamath Palpatia thing. I gave you guys the link. What else did I say I was going to talk about? I should, going forward, I'm going to write notes because I should really do that. Apple. Yeah, I'm going to short Apple. I'm actually going to short Apple. Yeah, I think Apple is going to, I think the market is really going to panic mode once Apple starts to crash because they haven't yet. And I think they're going to. So I'm actually going to short Apple. That's going to be one of the few micro plays I make because I'm going to stick to the S&P 500, but I'm going to short Apple with puts, by the way, not the traditional way of shorting. Listen, can you guys, don't be shy. Hit a 1 if you understand that shorting means you're betting on it going down, but like hit a 1 if you want me to explain exactly what it means to short a stock, because you don't really know what it means to short a stock and how it works. I don't know what AAPD is, N. All right, Tim hit a 0. Oh, hey, Mike. Oh, wait, is that V Mike? Is that my old first sergeant? Oh my God. Guys, Mike Garcia, legend. He's now a command sergeant major. He was my first sergeant when I was an instructor at the basic leadership course at Fort Stewart. I have so much respect for that man. And he was actually back in those years. I was always very centric. Mike, do you remember? This is before Tesla blew up. I had lots of Tesla shares, and there was an SGL there whose grandfather like bequeathed them a whole bunch of shares. I forgot his name, but he has a lot of Tesla shares. But anyway, everyone, Mike Garcia, this man, I don't. He's a legend, and he's a great trader himself. He's probably better than me by now. He was better than me back then. Anyway, Mike, it's so great to have you in my life. Thank you, sir. Thank you very, very much. I love that you're here. What's the question? Andre wrote a question that I missed. Andre, since the current date of the economy, do you consider buying gold? Oh, great question, Andre. I am actually very bullish on gold. I think that earlier I said I'm not bullish on anything. I lied. I'm bullish on 2 things. Not right now. I'm not going to invest in pounds here right now, but I am bullish on them. And if there wasn't so much money to be made in shorting the SPY, I would take a long position on gold or gold miners. Barrick Gold, ticker symbol GOLD, is my favorite. So yes, I am bullish on gold. So the reason I don't like inverse ETFs is because they are basically leveraged with options, and people buy them as shares thinking that they can just hold them for a long time. And what they don't know is that they have a lot of theta decay, and if nothing changes, those are actually worth less every day. So when I am bearish on something, I just buy puts. But again, I do know what I'm doing. For a lot of people, just buying the inverse ETF or inverse ticker is actually easier. Hey Mike, send me a Facebook message, man. I'd love to reconnect, man. See how you're doing. Yeah, really. I've always looked up to you, man. Yeah, one day I will. One day I will. That man. Yeah, we can reminisce about old times. When my channel gets bigger, I'll definitely invite Mike for an interview. Yeah. Yeah, if you're in here and you haven't already, subscribe and hit the like button. I'd appreciate it a lot. I'm trying to grow. I'm not even monetized yet. I need 4,000 watch hours, and I only have like 1,000 and something hours. That's gonna take forever. Listen, I have a very selfish ask. Okay. If you're in here and I've added value to your life, help me out, man. Watch my videos from beginning to end because, put it in the background. I need to get those watch hours up, man. That is such a hard metric to fill. So, yeah, help me out. Help me out. I'd appreciate that. Okay, we're hit 45 minutes. I got 15 minutes left. I'm determined to do 1 hour. I think 1 hour is a great amount of time. Is there anything else that you guys want me to talk about? No, you can try it, but I don't think. Oh, and if you're in the Patreon, listen, do that with our Patreon Zooms because those are like over an hour, and those, yeah, so you can just put that in the background. Um, for those of you who don't know what I'm saying, if you're in the Patreon, we have Zoom calls, and I make them private for my Patreon members, and they're always recorded. So if you missed the Zoom call, you can always see it and what we talked about. Yeah, I know, Greg Investory, but I'm impatient, man. Have you met me yet? By the way, Mike, if you're still in here, do you remember towards the end of my academy time, I was really complaining about my shoulder, and I even went sick call and got those injections. Well, yeah, I tore my supraspinatus, and I had 3 huge surgeries, and I'll never be like I can't lift my arm past this point. So I know you looked at me with disgust because, like, God damn it, you fucking, the P word, suck it up. And I never wanted to let you down, but oh man, I was hurting, and I have 3 surgeries to prove it. um, what about my dating? What's your dating question? You have a dating question? I must have missed it. Let me scroll up. Dating question, dating question, dating question. Blake, what to ask if you go to a speed dating event? If you go to I'm not a good speed dater. I'm awkward as fuck. What do you ask? I don't know. Hi, what's your name? What are your absolute, red flags? And then, tell her what your red flags are and see if she does any of them. Why waste time? Um, hit the like button. Yeah, it sucks. She having the stock market. Gabe starts off the speed talking about options. Yeah. Well, I have a girlfriend now, so there will be no speed dating for me. But I've never done the speed dating thing. I'm awkward as fuck, guys. I can't do the speed dating thing. What's your thoughts on Spy going into end of year? Yeah, George, I'm not gonna. You guys are funny. See, now, okay, Rich, start banning everyone. They're trolling me. No, I'm just kidding. I'm just kidding. I'm just kidding. Come on. Someone asked me a stock market question. We got 12 more minutes. 12 more minutes. Ask me a question. I am also bullish on oil and energy, but I don't know it very well, so I'm not going to take any positions. But logic says that they're going to do well. Yeah, it really does. I don't do them daily, no, but I'm going to start to be more active, Andre. Maybe I'll start doing them daily to grow faster. Explain enterprise value and why it's important. Wait, there was a question before that. On the shorting question. Melanie, okay, shorting. Yeah, how does shorting work? Okay, let me quickly explain how shorting works, right? So if you buy a share, you buy it, it's yours, there's no expiration date, right? However, and I'm going to use a prop for this because this is best used with a prop. Oh yeah, I'll use this calculator. Okay. All right. So I'm going to explain shorting using an analogy. Okay. So let's say your friend owns this calculator, brand new in box. And you know for a fact that this calculator is going to go 50% off on sale at Walmart next week. So you go to your friend and you say, hey, friend, Let me borrow your brand new inbox calculator. I'll give it back to you brand new inbox. And he goes, okay, sure. I'll lend you my calculator, but every day that you have it, I want you to pay me interest, right? And interest is it's always a little bit amount, but it is interest. It is something. I said, okay, no problem. So let's just, for the sake of this, saying I want you to pay me 5 cents interest, right? For every day that you borrow it. Okay. So you borrow the calculator, and on the market right now, the calculator sells for $10. So you borrow the calculator and you sell it on Craigslist for $10. So now you have $10 in your hand. But remember, you think that next week is going to go on sale at Walmart for $5. So you wait, next week comes, sure enough, the calculator is on sale for $5, right? So you say, great. You buy the calculator for $5. It took 7 days for that to happen. So you paid the guy that you borrowed the calculator for 5 cents every day. 5 cents times 7 days is 5, 10, 15, 20, 25, 30, 35 cents. You paid him 35 cents and you gave him back the calculator brand new in box. But remember, you borrowed it, you sold it for 10, you bought it for 5, and then you gave it back to him. So you get to keep the difference. You get to keep the $4.65, because after you paid him 35 cents, you still have $4.65 left. And that is basically shorting, everyone. Shorting is when you borrow shares from the broker, pay them interest, sell it at the market value because you think it's going down. Now, traditional shorting, like I just explained, has unlimited downside potential, also known as unlimited loss potential, because that stock or that calculator can raise in price unlimited. It can become Tesla and go to the moon. And if you didn't cover your short position, you can sustain unlimited losses. However, if you buy puts, you are basically saying the same thing. You are saying the stock is going to go down, but your losses are limited because you cannot lose more than the premium you pay for the put. So if you pay $5 a share or $500 a contract and the stock goes up instead of down, the most that you can lose is $500. However, if you short it traditionally and the stock goes up instead of down, you have unlimited loss potential. And that's why people prefer to short using options, because it's another way to mitigate your risk. So thank you, Melanie, for that. That's my explanation of traditional shorting and why people prefer most of the time to do it with options. Yeah, don't short stocks that pay a dividend. Absolutely. And don't sell covered calls on stocks that pay a dividend, because people, if it's called dividend arbitrage, people will exercise the call in the money because the difference is of the dividend is more money than the call. Okay, let me go up. Lady, explain enterprise value and why it's important. Do you mean shareholder equity value? Is that what you mean by enterprise, Tim? Like in book value? What's the best way to hit 50K in 3 months trading SPX or QQQ SPY? Well, George, it depends on how much capital you have. My opinion is that the best way to make money in this market is by shorting, by buying puts on it. That's my opinion, not financial advice. No, Cameron, she doesn't. When will real silicone mate come into play? Like Chelsea, I don't know. If you looked after a large fund, what would you be looking to do in this market? It depends on, like, my dream was to be a fund manager one day. That's why I'm studying for my CFA, Chartered Financial Analyst. And, I'm glad you asked that question, because I'm going to explain it like this. Individual people, traders, are like Corvettes or Ferraris. They can go in and out of lanes or in and out of the market, right? But big funds are like big track semi trailer trucks. Like they have to start braking early. They have to give a lot of time to change lanes. The more money that you're in control of and the rules governing that fund, the less options you have. So I can't fully answer that question because I don't really know what it all entails, but I'll answer it like this. If I was investing lots of people's money, depending on the account, at very least, I would buy portfolio insurance, 100%. I think everyone should take advantage of portfolio insurance. Yes, Andre, I'm still loaded with SPY puts. How much more monopoly being laundered through Ukraine? I don't think any more money will be printed. The Fed has started quantitative tightening, so they're not adding any more money. Can you do a limit buy when you short? So if it goes up to 10%, you can cover automatic. Yeah, that's called a stop loss. Yes, you can, Cameron. Mike, I don't buy all of my puts with a limit order. Depending on what's going on, I'll market order that stuff because I want to make sure I get it. And I don't, as the market goes up, and like in like Thursday, I dollar cost averaged into my positions, Mike, with market orders. Um, what are you risking with the insurance trade? You're only risking the premium that you pay. And if the stock goes down a little bit, but not a lot, then you most likely will at least lose no money on that because you'll hit your break even. Traditional reflects valuation metric, alternative traditional market capitalization that reflects the market value of an entire business. Okay, I'll look into it another time, Tim. Your input is greatly appreciated. Thank you, George. My dream is to start my own fund too. Awesome, Cameron. Got a lot to learn. I would look into a CFA. It's pretty much the gold standard. They don't even care if you have a master's degree in finance. It's the CFA is better than a master's degree. Alligator Babbitt cash puts. Do you think it's worth when there's? I fucking hate anything China. Don't ask me. I still need to learn options, and I'm going to pay you to teach me. Mike, you're like my no. You for free. Just hit me up, brother. I got you. Free. How high do you think the Nasdaq 100 will go before it falls? I think it's falling now. I don't think it's going to go high. Gabe's an option beast. Thank you, Melanie. Are you expecting crash before or after elections? I'm expecting crash or at least downside this week. And again, I'll say it again. I started off the stream with this. We're gonna go down. I see resistance. Resistance is no lower than 3350 on the SPX. I'll start closing my puts at 3400 on the SPX. And then I might even buy some calls, just some gambling calls out of the money, short term expiration for market volatility to pay off, and those calls to, because I believe there'll be another bear market rally or bull trap as I like to call it, but then we're going to go even lower. Is it worth loading cash secured puts on Palantir this week, or wait? Suhail, you should. Now is a good time because it's nearing oversold, but don't put all your eggs in it. Sell okay, I'll answer it like this. Let's say you have enough money or cash to buy a total of 10 Palantir cash secure puts. I say sell 1 to 2 of them this week. If it goes down lower, sell another 2. If it goes down lower, sell another 2 until you've don't go all in. Do it in steps. And what you're going to do is you are going to dollar cost average in if they get exercised, much better than buying shares because you're getting paid to buy shares. That's what writing a cash secure put is. What's the best thing to do with 5,000 pounds to your shares? Do you think? Um, Good question. Michael Ray, are you going to do you want to add more shares or you just want to hold? And what's your cost basis? That's also very important because if you're severely underwater, then writing covered calls is not advisable. All right, everyone, throw some party emojis in the chat. We hit the 1 hour mark. We can finish this soon. As soon as there's no more questions, we can finish the stream. Michael, tell me a little bit more. So what's your cost basis? GTS, you keep track of them by the same way you do anything else in your portfolio. You look at it all the time. Thanks, Cameron. Yeah, this was a good stream. A lot of good info here. A lot of good info here. All right, so we're about to finish up, everyone. I'm gonna edit the stream and I'm gonna put the link to the Patreon, or you can look in my other videos, and the link is in the description to my Patreon. If you like what I have to offer, and you know that you have nothing to lose, join my Patreon. There's a $25 level. I think you'll get a lot of value from it. You don't get one-on-one time, but I'm very, very active. You can ask me questions in the chat, and you can join into the Zoom calls. Oh, there's a tax question I need to answer because I said I would. There was a question all the way at the top about taxes. It's always nice to, yeah. Okay, I'm almost done. There is something I'm going to talk about taxes. Okay, I can't remember what it was. If anyone has a tax question, ask me really quick, like stocks and taxes. I'll answer it because I'm actually really good on that, and then we'll close out the stream. So if there's no questions immediately, what is COA? What COA? Certificate of Achievement? Haha. Does that make you laugh, Mike? So in the Army, we have an award called Certificate of Achievement. Okay, so look, let me tell you. Oh, how do you plan for capital gains while trading? Okay, great question, Dave. So if you're a trader, first and foremost, you need to understand what a wash sale is. If you do not understand what a wash sale is, you are going to pay taxes on money you did not make. Okay. Michael Ray, if your cost base is 11, then I don't think it's a bad idea to sell. Okay, I need you to pay attention. I'm going to give you like specific advice or opinion right now, Michael. So your cost basis is 11. Write a covered call that expires 1 month out. Let's say, and I'll tell you exactly what that is, just so you have apples to apples. You can understand what it means. Okay, so 1 month out is November 18th. Okay, a Palantir covered call at $11 is paying 8 cents. Okay, so listen, Michael Ray, listen. If you write a covered call, and you never write covered calls below your cost basis, you write a covered call at your cost basis and or break even. So if it's 11, you write a covered call at 11. You receive 8 cents. Let's round it up to 10 cents for ease of math, right? So when you receive 10 cents, this is great information I'm giving you guys. I'm actually going to make a video on this. For good rule of thumb, you take away 30% for tax purposes of that, because all premium when you write options is taxed at the short-term capital gains rate. So just good rule of thumb is just pretend it's in the 30% bucket, right? So 30% of 10 cents is 3 cents. So you made 7 cents. So now your cost basis, and you need to keep track of this, your cost basis is 7 cents less than $11. So that's $10.93. So now your cost basis is $10.93. When a month passes, right, and the covered call that you wrote expires worthless to the other person because it's not above $11, you write another one a month out, right? And let's say for that one you get 20 cents, and you write it at your cost basis. So it's the problem, you have to do $11 strike again, but this time you get 20 cents, right? So you take away 30% of 20 cents, which is 6 cents. So you got 14 cents profit. Now those 14 cents you subtract, you have to keep track of this, subtract your cost basis of Palantir by 14 cents. Then you keep on doing that until you can get to the next lowest strike price on the option chain, which let's just pretend is 10.50. So now, even though your broker says that your cost basis is $11, you know, because you've been keeping track of all the premium received, that your cost basis on Palantir shares is really 10.50. So you can right now cover calls at the 10.50 strike. And the lower the strike, the more premium you receive. So now you might get 45 cents, right? And you keep on lowering and lowering and lowering your cost basis. And guys, covered calls, when done right, are a great way of lowering your cost basis. So great question. Okay, last question on taxes, and then I'm going to end the stream. So do you recommend any CPA that you use for a specialty whose focus is stocks and options? Yes, I do. I am actually going to make a video. I'm actually going to make a video today. I'm going to make 2 more videos. I'm going to make one video on Roth IRA for kids, and I'm going to make another video about why it's a great idea, if you're a trader, to create an LLC and trade under an LLC. So I'm going to make those 2 videos today. Stay tuned. For those of you who haven't already, like and subscribe. And Suhail, yeah. So in that mail, there will be an affiliate link to the CPA that I use. So that he's a great trader CPA. So yes, I got you. I'm going to make that video today. So I'm going to make 2 videos today: Roth IRA and why it's smart to trade under an LLC. All right, everyone. That's the stream. Listen, I'm going to ask you one more time. Please, I'd really appreciate it. Watch my videos from beginning to end to get up my watch time. All right, guys, I'd really appreciate that so much. Put it in the background, please. It would help me so much. Help me get monetized faster. All right, you guys been freaking awesome. This was a great stream, my best so far. I appreciate you, each and every one of you, immensely, and can't wait to do this again. All right, see you guys next week. Bye-bye.